Good morning, everyone, and welcome to the European crossover webinar. And it's still relatively quiet trading here in August. We have seen the euro essentially steady itself a bit after dipping in yesterday's New York session. Looked like it might take out the lows on the Italian news, and as I said before, what else is new with Italy? But we have also seen the dollar index on its dip. Remember, we had our bias chart support here at 98.02. We took a dip down to what, 97.95, and we've quickly bounced back up to 98.27 here on the cash dollar index. Like I said, tight ranges. We had 98.42 on the upside where the dollar did struggle, and short term 98.02. And we now found ourselves about the middle of that area here. Cable had made a push for that 2165 bias chart resistance. It wasn't able to go on and sustain that move, so we're kind of just marking time as we approach Jackson Hole, which I believe that Fed Powell will be accommodating. For the rate hikes. So there's been some talk that they may not be. I don't see where that's going to make any sense, because that would just exacerbate an already difficult situation and ultimately force the hand to turn and cut, which is the one thing that some pundits are saying that they wouldn't lean towards. So it doesn't even make any doesn't make much sense. And if you were to go that route, and that did happen, and they kind of put the stiff arm to any further rate cuts or acted like this was a one and done, then you'll see the not only the equities come off, but it's not about the equities itself, as we're potentially seeing a pretty good slowdown recession with everything that's going on with China. So ultimately that would go on and speed that even further along, and finding themselves having to cut and question why they were so button tied in August, if that was the case. So once again, losing credibility. So I think they have to, I guess the concern is going to be how open will they be to accommodation. I have to think that they would, because the whole thing with China, which, let's say back in March was, we'll see what happened. In June, things are a little bit getting a little bit further along, but we'll see how that impacts. To now, where it's coming in, and you have to know, unless you're an ostrich with your head in the sand, there's no way that China has any impetus to go on and negotiate at this point. So this is a situation that will continue to go on and worsen, and we'll see bigger and bigger effects within the U.S. economy. So once again, that's why I think that Powell will be accommodating. I think the dollar will pull back. I don't think it's going to be a big sell-off, but reasonable pullback that potentially could bring us down to about, if, like I said, we do see Powell accommodating, probably about 96.5, maybe a little bit below 96.5. So pretty decent pullback if we see that, to the extent that I think Powell will be accommodating. Other than that, everything is still, as I mentioned, quiet in tight ranges. Peso has gone and slipped back. We had 1972. 4, I think it was, or 6, 1972.6 as our bias chart resistance. We came back there. We kind of bounced off that a little bit. We're kind of sliding beyond that just a bit. And dollar yen is trading relatively quiet in very, very tight ranges. Canadian dollar has really done a pretty good job at holding up here. We're kind of easing back just a bit, not a whole lot, and Aussie not doing much of anything. Cross rates are relatively quiet across the board. Not seeing any real movement. We can take a quick view there. You can see Aussie yen is just really just going nowhere, just stuck down here. And the guppy, after a quick brief flight above 29.50s, kind of yielded back here. And same thing with sterling odd. The whole sterling, a little bit of strength across the board yesterday, has kind of given way back to the norm as we slide right back. We got above that bias chart resistance of 79.44, and we're hanging above there. Get this little gravestone doji, and then the market's been sitting there, and finally we started to slide back. And Euro Aussie, no real news there, just very, very quiet trading, and not much to say. Although against the yen pair, we've seen a little bit of movement, and certainly Euro yen is a little bit higher. The bund continues to still remain relatively, I say strong, but obviously that's inverse relationships, so weaker yields. We have seen the here U.S. yields kind of take a bit of a dip yesterday, but we're kind of moving up a little bit higher. Same thing, I guess, up here with the bund. Not as to me, not as much as what you're seeing here with the U.S. yields, and relatively quiet trading also here in the equities. The real action is going to take place once again is once we get into Jackson Hole. So let's go and move in and catch a bit of the news, and bear with me. And just going to go and see what we have on tap for today. Maybe just a moment. I'll pull up the economic data. A little bit of UK data at the bottom of the hour, but relatively quiet until we get into 8:30 Eastern. We do have Canadian CPI data as well as Mexican retail sales, and we do have finally a little bit of U.S. data, which is going to be existing home sales. Later on in the evening, we'll have rolling into the next day. We'll have the manufacturing PMIs coming out of Australia. But today will be a big day for Canadian data, CPI data. And at 10 a.m. Eastern, existing home sales for the States. So on the morning bid, the market's steady, but risk lies ahead. Investors are getting jittery before Federal Reserve Chairman Jerome Powell's speech on Friday. U.S. stocks ended a three-day rally yesterday with balls of 6/10 or 1.4%. The Treasury yield curve has reversed its inversion for now as talks of more stimulus efforts in China and Germany have soothed inflation and recession fears, and markets seem to want to move higher. U.S. futures are up 0.3, and European shares are higher after a lackluster session in Asia. A lot of event risk lies ahead, though, starting with tonight's Fed meeting minutes, followed by Jackson Hole on Friday, then a G7 summit this weekend in France. They'll be watched for any signs policymakers are contemplating measures to tackle the world growth malaise. News on Sino U.S. trade front isn't great either. U.S. President Trump's latest comment being that it was necessary to take on China, even if it harmed the U.S. economy. Because he knows that he's not going anywhere, so I guess he has to spin it. And as I mentioned, China has no need. There's no impetus for them to negotiate at this point. Well, the U.S. decision to sell Lockheed Martin fighter jets to Taiwan is sure to stir things up in Beijing. Bond markets have benefited from safe haven flows. The long-dated German yields off last week's lows and more or less around flat this morning. The greater focus is on Germany's upcoming auction, where it will sell 30-year debt with negative yields for the first time. I just don't get it, folks. I really don't here. I don't see how that auction is going to go well. Let me pay you so you can hold my money. The sale is expected to go smoothly. Bond markets are also watching developments in Italy, where PM Giuseppe Conte has resigned, and President Sergio Mattarella has started 2 days of talks in Italy to see if an autumn election can be averted. Italian yields fell yesterday in hopes a caretaker government will be formed, but they're up 2 basis points this morning. Still not far off 2.5-year lows, as the promise of ECB stimulus underpins the markets. And let's see here, bond yields bounced, taking the dollar to 3-week highs, but it's Now down to 6-day lows. Sterling could also be more interesting as PM Boris Johnson prepares to head to France for the G7. The European Union is unlikely to give any ground on the Irish backstop issue, despite Johnson's threat to leave the EU with no transition agreement in place. Okay, let's move on. Dollar nudged off 3-week high, and US yields capped before Jackson Hole. The dollar was under pressure on Wednesday, elbowed by off a 3-week peak after bouncing yields stalled ahead of a global central bank meeting, at which the Federal Reserve expected to give clues on further rate cuts. Officials from major central banks will gather at Jackson Hole, Wyoming on Friday, with markets focus on scheduled speech by Jerome Powell. His comments are of particular interest after last week's inversion of U.S. yield curve, widely regarded as a recession signal, boosted expectations the Fed would lower rates at its September policy meeting. Faced with a rising risk to the U.S. economy, the central bank in July cut rates for the first time since the financial crisis. The index climbed to 98.45 on Tuesday, its highest since August 1st, as U.S. yields bounced from multi-year lows as the week starts on signs that global policymakers were ready to step up stimulus support to stave off steep economic downturn. Takuya Kanda, general manager at Guatom, believes President Trump's strong desire to keep deep rate cuts may raise hopes among some traders of strong easing signals at Jackson Hole, but he also warned that Powell may opt to give little weight in his speech as the Fed prepares for the September policy review. Investors will be looking for clues at the Fed's plans and minutes of his July meetings due later on Wednesday. The single currency dipped briefly after Italy's Giuseppe Conte announced his resignation. Conte's resignation won't have a strong impact on the euro in the long run, as it's only a chapter in the ever-shifting Italian politics. In addition to the Fed, the euro has also had to contend with the possibility of the ECB easing policy in September. The Bundesbank said on Monday the German economy may have continued to shrink over the summer as industrial production declined. That would mean the Eurozone's biggest economy is now in recession, following the second quarter's decline reported last week. Recession is commonly defined as the 2 consecutive quarters of negative growth. Germany in recession would generate a strong buzz, and there's no doubt that economic conditions in the zone would force the ECB to take its next policy to make it steps in Daisuke Katakama. So here we go. Let's go and move on to the bias chart. So with the euro, I'm actually going to go and keep the support the same at 1053 because with the Fed minutes, I'm not sure they may not be as supportive for a dollar pullback, at least the minutes themselves. I think Powell will be. So you could see another dip. The euro, although it steadied itself, it had a chance to really garner some ground above 111, and it simply hasn't done it. One of the things I noted yesterday in the chat room was, a 2-hour close above 111 would provide the all signal sign, and we simply didn't get it. The best we did was 10.99. So once again, if we could have gotten above 111 on a 2-hour close, seems like, oh, come on, a couple of pips. Yeah, but you know what? Did we do it or we didn't do it? No, we didn't. So you didn't get that fall. But we did see the market come higher. We did move higher, took some stabs, but we could not, seal the deal, a 2-hour close above 111. So I'm going to keep this on the downside. If we were to get a surprise in the minutes, we know at least what the parameters were on the downside. On the resistance, we're going to keep this 1129. So obviously still bearish. Let's go and move into the cable. Although I do think the dollar should be able to give further ground as we move into Jackson Hole. We've been talking about that already. Let's move into the cable. Very, very tight ranges. We had our 2165. We jumped above it, but we simply couldn't hold it. And that's going to remain the same, 2165. There's need to change it because a move above 2165 is certainly going to go on and generate some further buying if we get it. Yesterday was referred to as basically model buying with what we saw with the sterling as we saw this quick jump. Kind of took some markets, some participants by surprise. You look at the chart, it looks like it's a decent jump, but when you look at it for the most part. I don't know. I mean, it's 85 pips, and then we quickly, stalled, and then we since we're giving a bit of it back. Support on the downside is going to come in right there. Let's call it 2105. 2105. Let's go and move into the Aussie dollar. Very, very. Look at this. This is just dead as a doornail here in this Aussie. They did get those RBA minutes, basically stating there's no rush to go in and cut. I'm not sure why they would come up with that, but it hasn't really affected the Aussie one way or the other. So this is pretty simple. August trading, we're not even moving anywhere. This thing is just, I mean, you would think that these were, you know, 3 or 5 minute bars, and these are actually 2 minute bars, and we're just simply not even moving here. It's just dead as a doornail. You look at it, for the most part, 85 to what? 73. So basically trade like in a 15 pip range over the course of what with this bar here and that one, essentially trading in a 15 pip range for the last, I don't know, 14 hours or so. So no changes here in the odd. Let's move into the Kiwi. We've just moved a little bit lower, but we've talked about this, and we're going to go and keep that as our support, which is at 63.89. Let them try and take it out. They may, but I'm just saying is we know that this is very, very key support. I mean, there really isn't anything to do with the Kiwi unless you're, you know, maintaining your shorts. That's about it. Can we move even lower than that? Yeah, that's going to be an extended move, but I think we're going to have that catalyst to get there. There's still a ways up. But right now, resistance is going to remain the same. Main support 63.89, and resistance we can push this a little bit lower. It's actually comes in at 64.52. Let's take a look here. And we'll stay right there with that 64.60. So no changes here in the Kiwi. No changes whatsoever. Let's go and move into the dollar CAD. We do have Canadian data out today. This is the one pair that we'll probably see some pretty decent movement on. Potentially, I mean, this is key. If we were to see, it's already in a buy mode. Here's the thing: is it's already in a buy mode. So if we were to get weakened Canadian data, that would really actually allow this to push. Now that being said, if we do push on the upside, you're looking at this 33.82, which is huge here. Well, we do expect the dollar to pair back going to Jackson Hole. So I think that if we secure a close, a 2 hour close above this 33.44-ish area, that's going to keep the Canadian dollar under pressure. If we saw weakened data, we could come up here, challenge 33.82. I think they'll take some gains off and probably allow this thing to slide back. But this is really maintaining a very good strong hold on the buy side. We want to give it some leeway. Right there. It'll be 33.60. 33.60. And on the downside, call it 32.56. And moving here with the peso, we did have 1972.6. It's pretty much kept this market in check here. This is a little bit tougher. Let's go right there with 1964.5. And we can still pare back a little bit further. And the upside, $19.84.5. Dollar yen is just trading exceptionally quiet. Um, and there's no changes here. There's no changes here. It's going to remain the same here on the dollar yen on the bias chart. We had 674 and 620. 620 held. It's just going to remain the same here. And let's get into the cash dollar index. Well, this kept the market in check right here as far as the boundaries. We had 98.02, 98.42. Has really bracketed this market very well. Um, no need to change it. Seriously, no need to change it. It's bracketed very well here. Um, the bias chart support and resistance here. So we're going to move into the cross rates. No, we're in the throes of August trading. You can see that. I mean, we are just not moving anywhere. Same thing here. You would think that we were looking at 10-minute bars, and these are actually 2-hour bars here. And so obviously no change here in the Kiwi yen. No change whatsoever. Let's go move into the euro yen. Very, very quiet trading. You can see here. Same thing here. I mean, obviously the yen pairs are very quiet to start with. And not seeing a whole lot of action here. and nothing to change that here. So it's going to be 1833. We can probably move this up just a hair higher, not much. Call it 1837. But we'll keep this the same here. We should start to see some excitement as we come into Jackson Hole. Well, we do have the Fed meeting minutes that should generate a little bit of interest here, and of course Canadian data. But look at Euro odd, same thing here, just completely graveyard trading, just no movement in here. We're trading with a 30 pip trading range, and even less than that if you look at them just drifted here, but basically been trading in a 30 pip trading range for what, 2, 4, 6, 8, 10, 12, 14, 15, for 16 hours, I guess. No changes here, also here in the Euro yen. Will I mean Euro odd. We're going to move into the Euro Kiwi. Just the minor inkling of a little bit of a push here on the upside with the Euro Kiwi. We have seen the Kiwi, against the dollar, it's just pushed lower towards that 63.89 area here, which we're keeping. We're going to move this up just a bit higher, not that much higher, but we will, which is going to be 73.86. We'll see what it can do, but we're just going to give a little bit of extra room, which is going to be 73.86 here on the Kiwi. Now let's go move into the LCM. Same thing here, just no action. Like I said, the same thing in the sense that just more of the same August trading. Just nothing really happening here. Um, Actually, just move this a little bit higher right there. It's going to be 72.54. And the market has its eyes set for Jackson Hole, with the exception of, like I said, Canadian data today. It's not really a whole lot to focus on here. And European traders on holiday, and we just don't have the volatility. Let's go and look at the guppy. It's going to be 29.75. We'll go and keep the low. That still is going to remain the same. And lastly, we'll go with sterling on. We do have some UK data that just came out. Pound is just a 2150 is just a movement of about 10 pips, so nothing to hang your hat on. You can see here with sterling not really any movement whatsoever. We're just simply not moving. We can go move this a little bit higher. But as I mentioned, with August trading, there's just simply not a whole lot going on. We'll have to wait until we get into the States when we get Canadian data at 8:30 Eastern, Canadian CPI data. Yeah, we'll use up just a little higher. And we're back onto the main screen here. You can see a little bit of a jump here with the euro. Dollar pairing back. Once again, I do expect the dollar, like I said, to ease back as we move to Jackson Hole. Whether or not you believe, or some will believe, that Powell will be as accommodative, you have to figure that that's where the risk is. So we shall see peso kind of pulling back a bit here. Other than that, relatively quiet. No real response here to UK data hit with the cable. And everything else is relatively quiet. We do have Canadian data, as I mentioned, here at 8:30 Eastern. Canadian CPI data. Mexican retail sales, so be aware of that with the peso. And U.S. existing home sales at 10 a.m. Eastern. Into the next day, we will get Australian manufacturing PMI. We're going to keep tab on that. That's all we have. Like I said, it's quiet August trading. Going and get the well, go and get the bias chart posted, and good luck with the rest of the day.